Anish from BlackBull Markets. Now behind me is the chart of gold. If you've been following it this week, there's not been much movement. It's been in about a $20 an ounce range ever since we had that big move last week following the FOMC announcement, of course, Jerome Powell stating that they're expecting 2 rate hikes before 2023. Now this is, of course, that message resonates with other banks, the Bank of Canada, Bank of England, who all both come out and said similar things. Now, gold, of course, was on a bit of a tear over the last few months, and that was, of course, off the back of all the inflation-adjusted trade. Now, nothing has fundamentally changed at the time of this video. Inflation is still at 5% in the US, rallying across other developed countries that we get reliable data from, but gold hasn't really recovered from that previous fall last week. Now the question is, what is the next move for gold? What do we see on the horizon? And what are the key areas to watch? So this is what we'll be analyzing in this video. Now, I've been watching this range here. What we do see, when we see tight market ranges as such in this example here, ever since last week to today, we do tend to get large breakouts following tight ranges. So it's one first thing to note, but also what's interesting is that this range is well supported at the 1770 mark, and that's a 23.6% retracement from a previous high above that $2,000 an ounce mark to the recent support area at 1650. We'll look at that on a daily chart now. So that's the first thing to note on this gold trade on the 1 hour time frame. Tight range, well supported at the 23.6 retracement, which is around the 1770s. Now, if we head to the daily chart, this is where it gets really interesting now. As you can see, previously, this 1770 has held up back in November last year, of course, earlier on in that June last year, so at the same time this year, last year, and more recently, February, big consolidation, similar to perhaps what we've got now back in April, and now we're in June 2021 and we're operating around the same level. What we can see is that gold on multiple occasions has bounced to the upside following this, more notably back in November where we had that big push up above 1900. It was the second time after the $2,000 an ounce mark move, and then more recently, of course, a bounce up here in April back over to the towards the 1900s. Now we could expect something similar to happen again, especially as all things fundamentally point to a heavier gold. If you see the support levels on this chart, you can see again that double bottom where this support starts from, and that's a pretty strong area around the 1676. You see that strong support area around those 1770s where we're currently at the moment. Now, if we look at the RSI, again, we're in slightly oversold territory, and if you go back in, historically speaking, every time we bounced off that 30 level on the RSI, so we could well see a rebound from the 1770s. Now, we've been calling the buy the dip trade on gold because it makes sense longer term, especially this week when the dollar long trade hasn't been so compelling, especially as commodities are back in the limelight, heading into now the latter stages of 2021. So the expectation is if we do get buyers to come back into this trade, we could see 1770 very fast develop into 1829, recovering most of last week's fall where we saw, of course, those highs at 1870 and then the lows around 1770. So 1829 is your next target for bulls. On the flip side, a fall or a move lower in gold invites all of this area down to 1676, which is that key support area that formed back in March 2021. Now, it's an unlikely scenario, but it is possible if momentum takes it there. Federal Reserve is what drove this trade last week, and now we're getting supported markets. We could well see all of that news be digested, priced in, and then markets looking at the present time and potentially looking to continue the trend what we've seen since the beginning of the year, which is short dollar, long commodities, and gold is very much a key commodity in that framework. So Do keep your eyes on gold heading into next week. Of course, the end of the quarter for the second quarter of 2021 could see a bit of taking